All right, it's time now for business. Let's say hello to Kate Moody.
Hi, Francois.
And we begin with markets steadying somewhat, but investors still have the jitters over that real estate giant Evergrande in China.
Yeah, it's really teetering on the edge of collapse with that interest payment, which is due on Thursday. The ratings agency S&P saying it believes a default is now likely, and that could impact the Chinese property market and China's economic recovery. The major European indices managed to recover from Monday's losses. We saw stocks in Paris and Frankfurt closing up about 1.5% each, closer to 1% gains in London and Milan there. Wall Street's also rallying after the S&P 500's worst single-day sell-off since May. The Dow Jones and S&P 500 each up about half a percentage point. The Nasdaq a bit more this hour. Well, let's cross over to London and speak to Craig Erlam, Senior Market Analyst at Oanda. Thanks for being with us, Craig. Help us understand why global stock markets are so worried about Evergrande. How could it affect investors outside of China?
Well, I think it's worth noting that Evergrande is one of a number of stories which may be concerning investors right now, and it's very much been at the forefront in recent days, but it's not alone in creating some of these jitters. But it's making people nervous just sheerly because of its size. We have to remember this is a company that has $300 billion of debt. That's no small number, and that means there's going to be a number of financial institutions, banks, investors who are going to be exposed to it from inside and outside of China, not to mention the enormous number of people who are employed as a result of that company and the number of other firms that are closely linked to the company as well. So the ramifications of something severe happening to it will be quite widespread, particularly obviously within China itself and the impact that it can have on the entire property sector and credit conditions as well. So I think people are watching this story very closely, and as is so often the case with a story like this, while some implications of a collapse could be quite clear, there are always others which are not so clear, and that's the type of uncertainty that makes investors nervous.
Do you think the Chinese government is likely to step in with some sort of rescue package for Evergrande, and might that be enough to stem the risk of contagion?
The difficulty for the Chinese leadership is it's very much had a focus recently on not wanting to allow companies to get too big to fail, on this kind of moral hazard argument, and therefore it creates a very difficult situation for it. On the one hand, it doesn't want it to fail. It doesn't. The property sector has been a massive part of the Chinese growth story. So the last thing it wants to do is take any action which is going to jeopardise that and hit growth over the next few years. The flip side is a bailout effectively says that what we've seen from the company for a number of years now is perfectly okay, and others should try it. So I think we're going to see something happen. I don't think we're necessarily going to see a bailout, but one thing that's going to be clear is that any action that is taken from the leadership, if it is forthcoming, will ensure that those responsible are accountable, to ensure that people are not encouraged to do this, to put themselves in this kind of position of this size in the future.
Another big story for the markets this week is the U.S. Federal Reserve. It's kicking off its two-day policy meeting in Washington today. Are you expecting a shift in monetary policy from the American Central Bank?
I don't think we'll see a massive shift, but I do think that there is going to be a tone that's going to come with it that's going to try and reassure investors. So up to this point, the Federal Reserve's message has been that they want to taper or cut asset purchases later on this year, and I think they will stick with that overall message, but I think there'll be a lot of dovish caveats alluding to the fact that they are aware of the uncertainties, they are aware of the downside risks, rising COVID cases, slowing growth, and therefore they are willing to change tact if the data does tell them that needs to happen. And so I expect to see a lot of this communicated once more tomorrow, with the underlying message being that they still do want to pare back asset purchases, because ultimately the economy has recovered stronger than had previously been anticipated earlier this year, for example, but inflation is still a potential downside risk going forward.
Craig Erlam, a pleasure as always to speak with you. Thank you so much for that insight from London. Francois, I'll be back later on with the closing word on Wall Street, and of course we'll be keeping an eye on all developments about Evergrande.